So what you're saying is with this deferred sales trust, I could sell the business, let's use your numbers, for $10 million and then not pay any taxes on that right away. I can defer all the taxes, all the federal taxes, anything that applies in the state, et cetera?
Yeah, so depending on what depreciation you've received, if it's 1245, certain depreciations has some caveats, okay? And every situation is a little bit different. It also depends if you have any mortgage over basis, meaning let's say you owed $1 million on that business of debt and you had a zero basis. That's called mortgage over basis. We're going to have to do a couple things there. We're going to say, Ty, pay that down to the basis, or you're going to pay tax on that on that million, right, on that portion. So it kind of depends on your particular scenario. But hypothetically, if you had a zero basis and you had no debt on a $10 million sale, and all of the depreciation was just regular depreciation, it wasn't necessarily anything that's personal property, then in that sense, yes, 100%. You can defer all of that under the IRC 453, which is just an installment sale. And let's walk through a little bit how that works. So I imagine I just came to you and I said, Ty, I want to buy your $10 million business. Okay, I'll give you $2 million down payment. Would you carry a note for $8 million? In that scenario, you've received $2 million. Therefore, you owe tax on that $2 million. But that other 8 is in a deferral state. Okay, but hypothetically, if I came to you, Ty, and said, Ty, I want to give you a zero down payment, would you carry a note for $10 million? In that scenario, you received zero, Ty, today. So the other $10 million is in a deferral state. Okay, so this is how it works. The difference is we have this $10 million buyer over here that's ready to buy your business and you're ready to sell it to them. It's all worked out. And where the trust is going to jump in right in between, right before close of escrow. It's like almost a simultaneous close. And they're actually going to give you an installment note for $10 million and immediately turn around and sell it to that cash buyer for $10 million. Okay, and since the trust bought it for 10 and sold it for 10, the trust has what? A zero gain. Since you, Ty, received a zero down payment, your $10 million is in a deferral state. The buyer takes title the same way he would have. He's gone. And the money is sitting in the trust. Where's the trust? Bank of New York Mellon, Charles Schwab, TD Ameritrade, some of the largest financial institutions in America. And it's with a financial advisor, stocks, bonds, mutual funds of your choosing. So yeah, exactly what we're saying. You can exactly do that. And then you live off the interest. Now the interest payments are going to be ordinary income, right? Now, if you dip into the principal, you're going to pay capital gains tax on that proration of that. So let's say I want $1 million to travel the world with my family. Okay, if you dip into that, you're going to pay taxes on that $1 million. But the other $9 million is still going to be deferred. Most of our clients like to pay the tax the second day to never, meaning they're just going to keep it deferred and keep living off the interest. They're 10-year notes. At the end of 10 years, you can renew for another 10 years and then renew for another 10 years and just keep going, keep going, keep going. You can pass it on to your kids. Okay. And also, again, the best part, I think, for entrepreneurs, for your business professionals, for your commercial real estate listeners, is the ability to use up to 80% of the funds to go into a brand new LLC and partner with your trust to buy a brand new deal at any time. So you can sell high and buy low, okay? Meaning buy whenever you want or never buy again, right? But buy when the market makes sense, right? Diversify your holdings in multiple commercial real estate deals. Back to a little bit about the 1031 exchange. One of the biggest challenges is that it forces you to buy typically one property within one location within a short period of time. So you're neither diversified, you're neither liquid, and you're probably overpaying for a property oftentimes because it's a seller's market. You're buying within that 180 days. The Deferred Sales Trust, on the other hand, solves all of that. You can get diversified, you can get liquid, you can put it into 15 different commercial real estate syndication deals, right? You can do it with yourself or other partners. So it's very, very flexible. And the other biggest one I think would be for the debt. So for any of your business owners who have a lot of debt, the other thing is we can get, when we sell, all the debt is paid off and just the proceeds go into the trust. So we call it the debt-free plan too for your business or commercial real estate. So there's lots of parts of the benefits for your listeners. I'll pause there because you probably have some questions or comments.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.